All right, so hey guys, I'm going to be doing a quick video on price action because many people requested this in the group. So just going to be a very quick lesson. So it's mainly going to be about support and resistance, like the dynamic aspect of it and that kind of stuff. All right, so let's start it off instantly with just normal support and resistance, like could be lines or zones, doesn't matter. So let's mark some out. You have one right here, all the way at the bottom. That's the range we have. See another one right here, which is quite significant. This one out too. Another one right here. So you know how it works. It's like support or resistance. Support is where it doesn't push through the downside, and resistance where it doesn't push through the upside. So where price just can't go past. I'm sure most of you already know what it's about. It's like one of the first things you learn in Forex. So let me see real quick what we can. So like these are just zones, right? Like that price has struggled to get past or tested and went back down, all that kind of stuff. Now what can we use these zones for? We can use them to take trades. We can what we can do is we can take trades from one zone to another zone. So let's see, we have this zone right here. You see this where it touches the bottom. So it's a significant zone because it pushed down. It was pushing down for a while, and here is where it bounced and started going up. So this is a point where it started reversing. So we know that this is a significant zone. And then what happens the next time that it hits that zone? Because history repeats itself. It hits this zone and it instantly flies up. It almost went to this level, but it went to this level. So you could have bought right here, and you could have held it all the way to up here. And because it's on a support or resistance level, you can get a really good risk reward. So let's see. I'll draw one out. Where is it at? 1 second. Oh wait, here it is. So let's say you entered right here. You could have had your stop loss around here. Wait, give me a second. Let's say you entered at the bottom of the support. You could have had your 1 sec. Could have had your stop loss right there, and look at your take profit. If your take profit was at the first level of that zone, you would have had an 18-to-1 risk reward ratio. I mean, sounds pretty insane. It is insane. You probably won't catch a move like this. Well, you will, but not on the daily front, because daily people that swing daily usually have stops that are like this big, and that's not what I do anyway. I always have a stop of between 5 and 10 pips. I like to get sniper entries down. All right, let's move on. So we have this kind of support and resistance, just horizontal levels of support and resistance. They're most known. But what we can also have is dynamic support and resistance. So what this means is we can use an EMA. I have an EMA of 50, and the blue one is an EMA of 14, and the orange one is an EMA of 50. And the EMA of 50 and as well the 14 sometimes can count as support or resistance. On daily, you don't see it too often. You see it most on like hourly. But you can see right here where it starts to reverse. You can see it's almost like a trend line where it touches the 50 EMA but doesn't close outside it, and it bounces off. And it keeps bouncing on top of the EMAs, and here again, and here on the 14 EMA. And basically, it's kind of like a dynamic support and resistance, like it keeps following the price, so it always adjusts. Doesn't happen all the time, but like try it out on hourly and you will see what I'm talking about. Another way of support and resistance, so again, price action, is by using trend lines. I'll see if I can draw one out right here. There's one right here. You see at this level, it didn't push through, so here it counts as a support. Here it didn't push through the upside, so here it counts as a resistance. And then here it hit the level. Unfortunately, it gapped right here, so I can't see this price. But it went through, the wick went through the level, but then it went down again, it retraced. And of course, it's a daily candle, so on hourly you probably see a little bit better. But after that, it broke, it retested the trend line, and then it continued to upmove. And again, you see here, it retested the 14 EMA, and here again, it kept moving up. All right, so that's with trend lines on the EMAs. Now, something that will blow your mind, like when I first saw, probably some of you have already seen this, but when I first saw this, it completely blew my mind. So 1 second, move those levels. All right, I'm gonna add in a few horizontal lines at the bottom right here. Wait. All right, well, I need a few more actually. Just add a few lines. All right, so I'm gonna need to calculate for this. Oh, well, actually, maybe it's round numbers. All right, you see right here the level 162600. It's a round number. It's not. It doesn't end on like any decimals, etc. So now, what can we do? Let's say we drop this number by 200 standard pips. So that means we will have a level at 160600. So again, counts as resistance. Let's do it again. Again, 200 pips lower. So now we have 158,600. Let's put in a few already. Keep adding them in. Add a few more. You will start to see it in a second. This one. Go down to the 4s. You can kind of see already where I'm going with this. Every single line is which one that is? Okay. Every single line is 200 pips apart, and you will see how structured it is. Yes, now down to 3s. And this one needs to be 400. Oh, wait, no. Like that. All right, so these can all be removed right here. All right, so you can kind of see it now. We took from the level on the upside, we went 200 pips between every level. And you can see that it's very structured. It's round numbers. You can see them on the side here. And look what happens. You see this exactly at the bottom. And here again, it tests there. And this is also a significant level. Here it counts as resistance. Here it counts as support, 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 support. Here is resistance again. Here is support again. This is a very significant level. And we managed to spot this level by constantly moving our levels 200 pips apart. So this is it's something that not a lot of people use, but it's well, you can implement it in your trading. You can do it on hourly, but then with like maybe a 50 or 100 pip difference. But you can see how it works because it helps you that you don't have to spot the level yourself, because again, this level, resistance, 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 counts as support right here, and then here's support, and then ultimately resistance. And again here as resistance. You can see that like the levels, they're just drawn out for you. You don't need to do anything. You just need to move them 200 pips apart. So keep this in mind, because this can really help you out with like the emotional part of trading, because you might get attached like, oh no, wait, my line has to be there, or my line has to be there. But this takes away all that that emotional part in Forex. All right, like it's very what's it called? I think it's called objective. All right. So let's see. So another thing you need to pay attention to is the major and the minor levels, because let's see, this level I showed in the middle right here, you can see that it's used as resistance, it's used as support, and it always comes back again here. In previous price action, it was again used. So you know that this level, because it keeps coming back and like it's used over and over again, you know that this level right here is significant. So let's make this a different color. Again, this one, like the lowest and the highest part, are also significant because that's where price just doesn't want to push through. Here again, you see the wicks. It wants to push through, but it can't close outside. Let's mark another. This is also a significant level. The significant levels are the ones where we really have to pay attention to our trades and look for setups. Like when it's at one of these purple levels, we really need to keep our eyes peeled because a big move could be happening very soon. So how do I trade with this information? Most of you know I trade with a combination of price action, so that counts in trend lines, support and resistance, and all that kind of stuff. So like pure price action, and then with EMAs, I use the 50 and the 14 EMA to hold my trades as long as I can. I'll make a video of that as well, of the EMAs and how I hold my trades as long as possible. But for now, I look for certain patterns before I enter trade. One of the patterns I use most, or not actually patterns, but like occurrences, is retest. A retest basically means where you have a level. So let's draw it out. You have a level. Let's say price breakthrough right here. It goes from here up to there. Then it doesn't always continue upwards instantly. It doesn't keep going up after that. What usually happens is it goes back down. Either it hits right here and then it flies upwards again, where this arrow right here is the retest. It breaks a level, it then goes back down, it tests the resistance, which now turns support again, and then it starts going up. And this is the most conservative way of entering, because what you could do is you could enter instantly after it breaks this level. You could enter a trade, but what then could happen is it wants to retest, but you're already entered, but it decides to push even lower, and it's out of your confirmation zone. And then you probably see this, it retests the other level, and then it goes back down and you've lost the trade. So you need to be careful of that. You could enter aggressively right here, but I don't really recommend that. I usually trade retest. So I'll look for some examples. All right. So right here, you have a few. I'll show them all. You have one, it goes up, it hits a level, it then goes back down. This is the retest. We know that the market's moving upwards, momentum is upwards as well, it's covering a lot of space. Then it retests, and then it flies up again. History repeats, retests, and again goes upwards. Here again, it kind of happened, but this time it used the EMA 14, same as here and here. So we could have bought again at the EMA 14, this being the pullback. We buy again, and again goes up. Now, you may say, why did it go through here, but is it not going back up now? Well, it's breaking previous structure. I'll give an example. Let me just remove these arrows. This is a higher low, another higher low, a higher low, and then this is a lower low. It's breaking structure, the EMAs are turning down, momentum is closing down, dojis are forming. So because of the doji, it could still go up, it could maybe do this and then decide to drop. But it's looking like the up move is kind of done right here, unless it bounces off of this support right now. And then it still could be a retest, because if you look at these candles right here, you can see the wicks and how much it's struggling to break through this level. So that's another significant level. You need to watch out for that. So retest or something I take, that also includes breaks where it instantly pushes through. And then, like I said, breaks, retests, they're kind of like the same. They're compared to each other. But the breaks, if you enter at the breaks of structure, then that's a little bit more aggressive. So what we look for is exhaustion in wicks. When we take a retest, for example, you can look for exhaustion in wicks. Let's try to find one. They don't occur very often daily, more than hourly. I'll look for a nice example. Yeah, you see right here. These candles in this zone right here. You see all those wicks, and they all go to the upside, but you can see no candle has closed above this zone. So it's still very structured to the upside, whereas to the downside, it doesn't care about structure. It just goes all over the place. So this is an indication for me that to the upside is structured, to the downside it keeps pushing lower and lower. So this indicates to me that the upside is stronger than the downside, and then moves to the downside will most probably occur. So you see the exhaustion right here, retest. Then what happens is we know that it's exhausted right here. You can see from wicks it's exhausted, so there's extra confirmation. It then breaks this level. It then goes back up. It retests, and because we know there's exhaustion and we know that it's stronger to the downside, we can decide to sell at this candle right here. And again, what happens? It drops down, and then same happens here. Again, to the upside, it has strong wicks. To the downside, it's all over the place. Again, a sell. And then you keep repeating that. It's kind of like a staircase pattern, if you will. So that's another thing I use, which you can also implement. You can use it in like exhaustion. You can use in any strategy. It's just extra confirmation. Like where market is very sideways, you can use exhaustion to trade at the right time. So you don't have like overnight swaps and that kind of stuff. Another thing that could help, it's like you could use it the same way as exhaustion. It's kind of the same, but doji candles, it's where you have let's say you have a candle like this, and these are the wicks, and then this is the body of the candle. You have a very tiny body of the candle, but you have huge wicks on it, and that's a doji. I'll try to find one. Right here you have one. The one that my mouse is on right now. That's the doji candle. So what dojis tell you is dojis tell you indecision. If a doji happens in an up move, it could signal down, it could signal up, it doesn't matter, but it signals indecision in the market. So this doji occurred right after a break, right on a retest, so it's indecision. So no one knows it's going to go up, it's going to go down, no one knows, it's indecision. But seen as though you're already biased onto the downside, you can use a doji to your advantage and say it's going to drop down, so you can sell at the doji candle, and guess what happens? It dropped down. And then here again you see another doji again right here all the way at the end of the exhaustion, and what happens? It drops down again. You will see doji candles return very often, because here again you see exhaustion, a doji, and then it decides to go up, and then here again a doji decides to go up, another doji decides to go down. You'll see these candles very often, so keep an eye on those candles and learn them, because they're quite important. Another thing, I think I trade these just as much or more than the retests, but they're double top or double bottom patterns. I'll draw an example out right here. Let's say market's just going through this level. Well, up in drawing mode. Market's just going through here, doesn't really care about anything, ranging in this level. And then this happens. You see this? And then you could sell right here, but that's quite aggressive, because you don't know if it's instantly going to drop down, even though it's a significant level. Then what you can wait for is a retest, but this is also a double top. So you see it touches it twice. So it basically gets rejected twice. So then you can decide to sell, and you will see these or well, in this case at least it would be sell, double tops to sell, double bottom is a buy. I'll see if I can find one. Give me a second. If any are present on this chart. All right, here, this could be a double top. It touches once, drops down, it goes back up again, it touches again. So this is our double top. One, two touches, twice it gets rejected by price, it doesn't close the tie. We sell right here, and look at the big move that occurred after that. Double tops and double bottoms are probably my favorite pattern, mainly because of the success rate and because they're like you can enter right at resistance or support. So for sniper entries, so sniper entries, I'll get right into sniper entries because I have very tight stop losses, and that's how I can get high risk reward because I enter a trade as if it's a scalp. And I hold the trade as if it's a swing. So I have the pips from a swing trade, but the stop loss from a scalp trade. And that's how I can sometimes get a risk reward of over 20 to 1. Basically, sniper entries, the biggest part of sniper entries is just basically patience. If you don't have patience, you can't have sniper entries. Well, you can, but then you need to put limit orders down. So let's say you see the market going here and you see some, you want to sell at this level, at the significant level we drew out. So you want to sell right here, but you see it's kind of like going here and going up and showing a bit of exhaustion. Most people will probably have said in this zone, fine, I will sell right here in this zone. Keep in mind, these zones are 200 standard pips apart. So that means your stop loss, if you would place it above this resistance, your stop loss, if you entered in this zone, would be at least 200 pips wider. So because, well, I don't really want to enter a scalp that has a 200 pip stop loss. I mean, that doesn't make any sense. So what you do, you see at this level, we want to enter at the purple line. We do not want to enter here. We do not want to enter there, not there. It doesn't matter. We want to enter at the purple line. So what do? We enter at the purple line. If it goes down, sure, we missed out on it. We look for the next opportunity, which we are going to retest right here, right here. We keep looking for new opportunities if it fails, but we want to enter at the purple level. So we wait till it reaches that level, and that's where we sell, and that's how we can get a stop loss that is insanely tight. We can have a stop loss. Let's say you enter this as a scalp. So let's say you enter this trade on the minute 15 or the minute 5, and you have a stop loss of maybe 10 or 5 pips, right? Let's say it's kind of hard this time frame. Let's say you have the 12 pips of it. It looks very small here because it's a daily chart, of course. But we entered as a scalp. We have a very tight stop loss. Imagine using the momentum and the EMA crosses to hold a trade. I mean, this is like the best case scenario, but you would have had a risk reward of 145 to 1. I mean, it sounds pretty crazy. It is crazy. It probably won't happen to you. It is possible, but it's like a once in a lifetime thing. But that's the way I trade. I have very tight entries, and then the trade goes according to a swing. And that's how I can get insane risk reward ratio. I usually do this, exactly what you just saw, but then on the hourly, and that's how you get like 20 to 1 risk reward ratio. I don't really like to hold trades according to the daily. But that's like the way I trade. That's how I can get those trades, because like I don't have a very high win rate, but I don't need high win rate because if I win a trade, I will win like 20 times what I put in to the trade. So that's how I can consistently be profitable. What you can also do for the sniper entries is you can decide to split entries or lot sizes. So let's say you would trade with a lot size of 0, or maybe it's easier, 1 lot size. And you want to enter at the purple level, but you do not want to miss out on the trade. So what you can decide to do is you can enter at this level where everyone is probably entering. So yeah, entry 1 right here with a 0.50 lot. So you don't miss out on the trade, and you can enter again at the purple level with another 0 to 50. So you missed out on a few pips because you didn't enter the full lot on the purple level, but you still went safe by not being able to miss the move if it didn't go up to the purple level. Yet you still entered again at the purple level, so you still all the way made it from the top. And because it's such a tight entry, you can get higher lot sizes than if you take like 1% risk and that kind of stuff. So you can think that through and trade with what the risk that you're comfortable with. So that is about it for this video. It's a quick video because everyone was asking about it in the group. Another video will be made with the EMAs, the way I hold trades according to the EMAs and what the EMAs need to tell me before I take a trade, or different situations with the EMAs that tell you it's going up or down, or momentum is dying out, or momentum is building up, or the EMA crosses. I'll be talking all about what I do with EMAs. That video will be released sometime soon. I'm not really sure as I'm very busy at the moment, but that will be made as soon as possible. So catch you guys later. Cheers.